We're officially live. So today's topic is one that is near and dear to my heart, which is mailing for off-market deals. I've been mailing for off-market deals now for 15 years, and it is absolutely one of my most tried and true marketing methods. It's a marketing method that, for better or worse, I'm pretty well known for in my own local market. We have been, hitting the same homeowners over and over again for 10, 15 years. So I've got a lot to kind of say about it. But before I talk about mailers, I want to hit on a couple other topics that I think are just as important. The first of which is I want to talk briefly about a conference that I'm going to this Thursday, Friday, Saturday, and Sunday in Miami, Florida. It's called the Raise Masters Conference. And the entire conference is to teach people how to raise private capital for their real estate investing business. Now, I've talked a lot about raising capital. Invariably, when I ask agents what their number one biggest struggle is in their real estate investing business, almost every single time they tell me it's lack of money. And to me, it's never about a lack of money or a lack of deals or really a lack of, typically what people think their problem is. It always boils down to a lack of education. And I've been promoting our November 3rd, November 4th event for a while now. And we have over 700 people who have registered for the event, which is absolutely phenomenal. Um, but the number should be higher, especially for the people that are local to our market. Like if you're in New England, I had somebody the other day that was in Connecticut, Hartford, tell me that the event was too far. 2 hours, 2 hour drive, 1 hour and 45-minute drive to an event. I'm flying out to Miami Thursday, Friday, Saturday. And it's that important. It's that important for me to spend money on airfare. Not that I want to spend time away from my family, but this was a commitment that I made because it's that important to my business that I raise capital for my business. So I'm probably going to spend $2,000 or $3,000 just to attend this event in Miami, and I know I'm going to get return on it. I know that even though I know a lot about raising capital, I'm going to pick up two or three or four things at the event that are going to change the course of my business. The reason I'm bringing it up is because even though I am where a lot of you want to get to someday, there's still much more levels up that I can go. And who's ever a few more levels up for me, there's more levels up that they can go. But it all comes down to committing to this craft, committing to putting in the hours, committing to learning. So I hope that, me explaining to you that I'm spending, a couple $1,000s to head out to Miami, taking time off of work, taking time away from my family, really jumpstarts all of you who are listening. If you haven't already registered for our November 3rd, November 4th event, please go to www.agentinvestorevent.com right now and register. We're pretty much sold out. I say that with the caveat that not everyone's going to show up that's registered. So at some point in the near future, we are going to have to say, okay, we've had enough people register where we have to shut off registration. So again, if you haven't done it already, go to www.agentinvestorevent.com and register for the event. Um, Second thing I want to say is I'm diligently working on the completion of the Agent Investor book. I started the book about a year ago, and man, it's been a lot of time, effort, and energy to get it to the finish line. I have a manuscript. It's already written, and now I just need to kind of go through it and make my final edits and kind of live on them. I'm having some difficulty because I am a perfectionist. I want to make sure that the words that are in the book are exactly how I want my message to be portrayed. So my plan is to, while I'm on the flight to Miami, both ways, it should be about a 3.5 hour flight. I've printed out the manuscript, and my goal is to be able to go through it all, mark it up, and maybe in the next couple weeks put it to bed, and then it goes into production. It will also be on Audible. Um, so I hope to have that completed within the next couple of weeks. Just kind of a little small announcement. I know some of you have been asking me about the book, and just an FYI. But before I go into the mailers, can you guys just do me a favor? Type into the chat whether you can see me and hear me, just so I know that I'm good to go to start talking about mailers today. Again, if you're in the chat and you can see and hear me, just type see and hear so that I can see. And I do apologize in advance. Not feeling 100% today. I promise to give 100% effort today, and I am 100% capable of giving a great presentation on mailing, even though I'm not feeling great. But I did want to just let you guys know that I will be maybe struggling through this a little bit more than other presentations. Um, so again, to kind of go back in time, like I said, I started mailing all the way back in 2007, 2008. I basically started mailing right out of the gate. Um, I'm a I'm a shy person. I'm not, super assertive. I'm a smart person, but I'm a hardworking person. But I'm not a super prospector. I've never been one to really knock on doors. I've never been one really to do a lot of the aggressive forms of marketing that are out there that are free. So I knew kind of in the beginning stages of my investing career that if I was going to be successful and I was going to get off market deals, that I really needed to step up to the plate and I needed to spend money. And one theme that I always talk about when I talk to anybody who's considering getting off market deals is really just the simple fact that you all have to make a decision. In order to getting off market deal, you're either going to need to spend time or money. There's no other way to do it. You're either going to have to put blood, sweat, and tears into door knocking or cold calling or networking, or you're going to have to put money into things like mailers or pay per click or Facebook ads or TV or radio or what billboards or whatever. But you're going to have to make a choice. And today we're talking about the choice that I made early on in my career, which was to spend money on mailers. So there are a lot, like when it comes to marketing for off market deals, there are a lot of different ways to get off market deals. But I want to talk really quick, like why do we need off market deals? And I know that everybody has an idea in their head about like why they need an off market deal, but I just want to really cover it really quick because it's really so important. If you don't understand this concept, then the effort, time, and money that goes into getting off market deals is going to seem like it's not worth it for you. So, when we're talking about getting off market deals, I look at it like when you get an off market deal, there's two things you can do with an off market deal. Number one, you could quick turn it, meaning wholesale it, flip it, assign it, or you could hold it. And off market deals are really important for both things. I'm going to explain to you why. They're critical, they're essential for both things. If you want to fix and flip a deal, if you want to assign a deal in today's market, now I know as I'm sitting here doing this training, the market's shifting a little bit, but we still have no inventory. And I don't think we're going to have any inventory anytime soon. There are too many variables that are keeping people in their homes. Even the rate increases are going to keep people in their homes. They're going to keep people in those 3% rates. So you need off market deals because if you're going to fix and flip a house, you need to make margin. Or if you're going to assign a deal, you need to get it for a price where someone's going to be willing to pay you for the contract. And in pretty much every market across the United States right now, you really just can't do that by buying a property on the multiple listing service. So if you're going to do quick turn deals, if you're going to
fix and flip or you're going to assign, you need a mechanism to get in somebody's living room and make them an offer and buy their house for less than what you could pay on the multiple listing service. Now, someone might say, well, yeah, but I don't need that in order to do buy and hold. And while that could be true, kind of, it ends up being a much more difficult. Let me explain to you why. So, most people who want to do buy and hold have a goal that they want to earn enough passive income so that they don't have to do their active daily activities, work a full time job, be a full time realtor, whatever. You want to have freedom, you need flexibility, you want to earn $100 to $500,000 a year passively on a passive income portfolio. In order to do that, you need to buy a lot of assets. In order to buy a lot of assets, you typically need a lot of money. However, if you're able to buy the properties at a discount, you can use the BRRRR strategy. So, for example, I'm in Boston, and if you were able to get an off market property in Boston that might sell on the MLS for $1 million, let's say that you did a mailer and you got the property under contract for $800,000, you could buy that property. You only need one down payment. You could put a little bit of money into that property. You could renovate it. You could rent it. And then you could refinance it out and pull your money out. Now, that strategy, that BRRRR strategy, works really, really, really well when you buy a property discounted because you've got a bunch of equity at the end to be able to pull out the equity. Now, if you bought that property on the MLS, especially in a market like today, that's probably going to be flat to maybe down in 2023. You buy that same three family in Boston that's worth $1 million today for $1 million a year from now, that property might be worth $950. So you might get your down payment trapped in that multifamily. As opposed to if you got that deal off market, if you got that deal discounted, you may be able to pull your equity at the end. Does both of those things make sense? Just type make sense into the comment section so I know. Because if this part doesn't make sense, then me teaching you how to do mailing, it's not going to be of any value to you. You have to understand why you're mailing to begin with, because you're going to have to spend money to mail. And why spend money to mail if you don't think that you need to get deals off market? So again, if this makes sense, type makes sense. If it doesn't, please shoot me a question into the chat box as to what doesn't make sense. Because I'll stop here. I'll cover anything that doesn't make sense. I want to make sure that everybody who's listening right now, in their mind is like, yeah, I get it. Now just show me how to get deals off market. Okay? All right. So a lot of make sense are coming in. Guys, stop me at any time. I'm going to go a little bit slower today than normal just because I don't have the energy that I normally have. So if we do need to stop, we can stop. So we kind of, at least most people are acknowledging that it makes sense that you need deals off market. So I want to talk a little bit about the pros and cons of mailing. Every marketing strategy has pros and cons. I don't care what strategy you throw at me. I'll give you the pros, I'll give you the cons. And really, what you all need to be thinking in your head during this entire presentation is, am I is mailing going to get me the results I want to hit my goals? And am I willing to commit to this marketing strategy? No marketing strategy has instantaneous results. If it did, we'd all be marketing all the time. Most people give up on marketing because it's not an instant result game. And mailing is no different. So, some of the pros of mailing that I really like. The first pro is that you're not spending any of your time really. I mean, you're just creating a list, you're throwing letters in the mail, and you're getting calls. I mean, it's one of the most time effective ways to get off market deals. It's also very targeted. So, the great thing about a mailer, as opposed to a Facebook ad or TV ad or billboard, is you know who's going to be calling you. So, for example, again, I'm in Boston If you want to buy a three family in East Boston, which is a tiny little subsegment of Boston, and you can mail every three family in East Boston. It might be like 3,000 people. You can hit all of them. And if you get a call from that mailer, guess who's going to be calling? Guess who you're going to be talking to? The owner of a three family in East Boston. Sounds really simple, right? But let's say like I run TV ads. When I run a TV ad, let's say I want to buy a house in East Boston, I'm very infrequently getting a call from a seller in East Boston because my ad is getting shown all over the state and to multiple people with multiple properties that they own. So mailing is very, very targeted. If you have a very small geographic area you want to hit, if you have a very specific type of property that you want to flip, assign, or buy and hold, mailing is very, very targeted. Some of the cons. Biggest con is it's expensive. Now, when I tell people the cost to get a deal from mailers, they usually kind of go into some sort of shock. Actually, let me do this. What do you all think that you need to spend in mailers to get one good off-market deal? Type it into the chat section. I'm just curious to see where you guys all think we need to be. How much money in mailers do you need to spend in order to get one off-market deal that you're going to be able to either assign, wholesale, fix and flip, or buy and hold and say, wow, that was a great deal? All right, so the first comment came in $500. Okay, what do you all think? Keep putting into the comment section. I got to know where everyone's baseline is at right now. I only got one comment, so I'm going to wait until at least a couple other come in. 5,000. Somebody said more. Well, what does more mean? Give me a number. Somebody said 1,000, 2,000, 4K, 5K. So these are really good guesses. So far in 2022, my number has been $18,000. $18,000 per deal. $18,000 to get a fix and flip where I make 65,000. $18,000 to get a really good buy and hold opportunity, which down the line is going to make me $500,000, over a long period of time. It costs me right now about $1,000 just to get an appointment. Okay, $1,000 to get an appointment. It's taking us 15 to 20 appointments to get a really good off-market deal. I say these numbers not to scare anybody. The last thing I want to do is prevent somebody from mailing or doing some sort of marketing. The reason I say these numbers, and these numbers are very important for me to disclose, is because if you are not willing to have a major commitment to mailing financially, you are likely going to waste your money. Now, you have to think, just because I said it cost me $18,000, it doesn't mean if you spend $18,000, you're going to get a deal. $18,000 just gives you 18 appointments, which is about how many you need to get one really good off-market deal. Doesn't mean that you're going to get a deal. You might get two deals, you might get zero, which is why the second part of why mailing is really tough is because you need to make a commitment over the long haul to spend money on marketing. Meaning that, to me, and this is just my opinion, you guys are free to do whatever you want. In my opinion, if you're not going to have a $4,000 or $5,000 a month marketing budget for mailers and have it for a year and kind of close your eyes and be like, yeah, I don't care what happens, I'm going to continue on, this may not be the right marketing strategy for you. Scott asked, how many mailers are going out for that 18K? I don't know, we're at like 60 something cents a mailer, so double that almost, maybe like 25, 30,000 mailers. And my numbers are pretty consistent. So My numbers are for Boston. Not all of you live in Boston, but I am in a networking group where I talk to people all over the country. And at this point, I don't see too many people who have a sub $10,000 cost per acquisition. Boston is a little on the higher side, but Los Angeles is higher. San Fran is higher than that. So Boston's not the most expensive area, but it's up there. So that's the biggest con of mailing. And so when I talk to a lot of people about mailing, they want to have a two, three, $400 a month marketing budget. And you can have a two or three or $400 a month marketing budget, but you're not going to give yourself enough of an opportunity to actually get a deal. And that's the problem. So again, I jumped into the segment basically saying you either need to commit to spending time or money. For a lot of people, they want to spend money because it saves them the time, but they're not willing or able to commit the amount of money that you need. So you may have to pick a strategy that's a time strategy. You may have to out of necessity. Nothing wrong with that. So, next thing I want to talk about is the type of mailer. And I don't like the type of mailer discussion. I actually really hate it because the type of mailer is the wrong conversation to be having. It's all about consistency and frequency and total mail pieces and not about the mail piece itself. I spend a lot of time talking to people that want to have the perfect mail piece, and the perfect mail piece doesn't exist. I can tell you what I do, and I will tell you what I do, but I will say this: for the most part, if you go to a company like the company that we use a company called Open Letter Marketing. If you go to Open Letter Marketing or any company that does this professionally, they're going to be able to give you the templates that work. And they're all going to be similar. They're all going to say something like, hey, have you thought about selling your house? If you want to sell your house, we can help you sell your house in an easy fashion for cash, no realtor commission, no fees, close on your own time. Call this number today to get a free, no obligation quote on your home. They're all going to look almost the same. They're all going to have the same messaging. Some of them will be handwritten, some of them will be more professional, but they're all going to effectively do the same thing. And by the way, if you guys do want to see a copy of the mailers that we send out, send me a message on Facebook. You can just go on my Facebook account, send me a message, and I'll send you my mailers. Or I found out about this handy dandy little link thing for all Facebook Messenger requests. So if you do m.me/Tommy Caffarella, that is my Facebook Messenger link. And I found out that's an easy way to kind of tell people m.me/Tommy Caffarella. If you want my mailers, I'll give them to you. But I will say that that's not the most relevant part of this. And I wouldn't spend too much time on that. I would go to a mail house, and I told you the one that we use, but there's plenty of reputable ones. They're all going to kind of cost about the same. They're all going to kind of do about the same thing, and that's not the magic. The magic is in being consistent. Okay. Next thing I want to talk about that is really important is who do you mail? This is important. This is very important. This is the part that you don't want to screw up. You can kind of screw up the mailer. Like, as long as the mailer kind of says what you want and it looks professional, like, you'll be fine. What you don't want to screw up is the list. So the first thing that you want to think about is the obvious of like, well, what do you want to buy? Like, what's your objective? Are you buying to flip? Are you buying to buy and hold? Are there specific towns that you want to attack? Do you want to just go in the towns that produce the most amount of investment deals? Do you want to be in a certain geographic radius of where you live? But then there are the other filters. So the other filters are more like, how do we find motivated sellers? Like, what types of sellers can even sell to investors? And I'm going to talk about the most important filters right now. Now, in order to get a list together, you want to go to a company like List Source, LISTSOURCE. List Source is going to be able to provide you with a list based on your criteria. And I'm going to talk about the criteria right now. So, the first and most important criteria is the person has to have equity in their house. That may sound obvious, but most people don't have enough equity to sell to an investor. So I live in the town of Melrose, Massachusetts. And if I run a list of all homeowners in Melrose, Massachusetts, and I say, hey, I want every seller, every homeowner with at least 50% LTV, I'm going to take a town with 10,000 houses down to like 3,000 houses just with that one filter. Because if somebody has a house that's worth $500,000 and they owe 400,000 and my offer needs to be 375, we're dead in the water. Every letter that I send to them is a waste of money. And you'll find almost all across the board in every city, in every country across the United States, that most people don't have a lot of equity for a lot of different reasons. Some people can't afford to pay down their mortgage. Some people have recently refied to do an addition on their house. Some people use their houses and their debt on their houses as places to have other investment properties, right? You might refi your house, pull the money out, put it down on a multifamily. You might pay off student debt. You might pay off credit cards, but most people don't have equity. So you've got to make sure I like at least 50% loan to value. So they've got enough wiggle room there that if their house is worth $500,000 and your offer needs to be 425, I want them to be able to walk away with enough money and say, okay, I know I'm taking a discount, but I still have money left over. Okay, so the second thing is length of residence. How long have they lived in the property? And again, this filter is going to knock out a lot of people. It's going to knock out a lot of people because a lot of people have bought their house within the last 5 to 10 years. Somebody who just bought a house in the last 2 or 3 years is very unlikely to even be selling, period. Now, if they do sell, they're very unlikely to sell at a discount. So if somebody paid $500,000 for their house in 2018 and you go out to their house and offer them 425 in 2022, that's going to be a very hard seller to convince because all they've heard over the past 4 years is how much property values have risen. And now you're offering them less than what they paid in 2018. It's not going to make a whole lot of sense. It's the wrong type of seller. So I like to have at least 5 years of residency, but most of my deals have been more like 10 plus years. Because if you really think about like who is the person that needs to sell cash? Not needs, that's the wrong word. Who's the seller that prefers an easy sale? You have to think about like the demographics. Who is the person? The person is typically somebody who's owned their home for a long time, some deferred maintenance, has very little mortgage balance left over. They're older. They don't want the hassle of a traditional sale. They know that taking less is, they're not going to get top dollar, but they want the easy sale. So to piggyback off of that, we rarely buy a house from somebody who's under the age of 40. Very rarely, because it's not the right stage of life, right? Like right now, I'm 40 years old. I'm still in the growth phase of my wealth accumulation. When I'm 60, 65, 70, am I going to think about selling to an investor? I might consider it, right? Because it's probably not the most important thing to me in my life to be accumulating wealth at 70. Just not. And that's what you're looking for. So again, age filter. We talked about a specific city or cities. We talked about a mortgage balance. We talked about length of residency. The other filter that I like, that I think is important, is the age of the property. So if you're in an area like Massachusetts, you're fortunate enough that most of the homes are really old. So, if you run a filter and say, hey, you know, I want to exclude all the homes that were built before, I, I want to exclude all the homes that were built after 1990. In our area, that's not going to exclude a lot of people, but it may in some other areas because we want to exclude homes that we know are very, very unlikely to have deferred maintenance. So if a house was built in 2016, the odds that it has a lot of deferred maintenance by definition are pretty low. So I like to say, I want to target houses that were built before 1970. Anything after 1970, where I live in my market, is considered newer and is much less likely to have a lot of deferred maintenance. The other filter that I like, and there are a million filters, right? You could put begs, you could put baths, you could put square footage. But I like to have a square footage filter because what I found is that the bigger homes for us have always been less profitable. The bigger homes tend to come with a different demographic of buyer, and the bigger homes tend to have a bigger renovation budget that can more likely go above and beyond what we expected. So if we do a 1,400 square foot house, we feel like we can control the budget pretty well. If we do a 4,000 square foot house, going over budget by 30, 40, $50,000 wouldn't be shocking. So those are some of the filters that we use. There are many more filters. And if you go to a company like ListSource, you'll be inundated with the amount of choices that you can have. I gave you guys what I think are the important filters for me. But what are your important filters? It depends on what your goals are. It depends on what exactly you're trying to do. Are you trying to flip? Are you trying to buy and hold? Are you trying to do quick turns? So again, that goes back to your individual goals. And that's something obviously that I don't have the opportunity to answer right now. However, as of today, I am going to make an announcement on something that we're doing that's going to be pretty cool. And it's a once a week group strategy session that you can all register for right now. So the strategy session is limited to 5 people. And it's going to be every Wednesday at 10 a.m. starting 2 weeks from now. So if you're on this call and you're like, well, I get all the stuff that Tom's talking about, but I want to know a little bit more individually what I might do. We're going to jump on a private Zoom call. Like I said, 4 or 5 people. And we're going to talk individually about your specific situation. Now, in order to register for this is free. You have to be willing to at least listen to the inner circle pitch. It'll be like 5 minutes. I'll explain to you the benefits, the pros, the cons of the inner circle, help you determine whether it might be a good fit for you and for us. But the most part of the actual session will be around what your needs are. And again, it will be a small group session type of thing. In order to register for that, you can register right now. All that you need to do is go to www.agentinvestorinnercircle.com. www.agentinvestorinnercircle.com. And the only thing I ask if you book is please do not book until Wednesday the 19th. Wednesday the 19th or after you can book. There are 2 slots open on the 5th, tomorrow, and the 12th, but I will not be able to do either of those. So if you schedule that, you will show up on Zoom and I will not be there. So please book anytime Wednesday, October 19th or after. Okay? www.agentinvestorinnercircle.com. And as a requirement to show up for that session, you have to fill out a goals worksheet that will take you about 5 minutes after you sign up for the Zoom call. So if you sign up for that Zoom call, again, you'll be in a small group session. We'll cover, individual pain points for yourself. We'll figure out how we can help you. I'll talk briefly about the inner circle. Again, www.agentinvestorinnercircle.com. Okay. Any questions about that, please type into the chat box. Again, I'm not feeling 100% today, so I may not be doing a great job of explaining everything. I've got kind of my notes to the left of me. Usually I talk without notes because I usually don't need them, but today I do. So we talked about the filters, we talked about using list source. Now I want to talk about the frequency. So there is no hard and fast rule about frequency. What I will tell you is when it comes to somebody selling their house, especially at a discount, your mailer is not going to convince them to do anything. All your mailer is going to do is it's going to have you show up in their mind, hopefully at the right place and the right time. So your mailer is not, nobody is going to be sitting at their house, opening up their mail, getting your letter, and being like, wow, I could sell my house easy, fast, for cash, as is. I wasn't even going to sell my house, but this letter's so good that I'm going to call them and probably sell. It's not how it works. How it works is that when people sell their house, they think about it for a while. They talk about it. There's usually more than one person involved, right? Whether it's a kid, a spouse, significant other, or even just somebody that's a friend, like, hey, I'm thinking about selling, like I don't know what I should do. It's usually not like a 2-day decision. So they've been thinking about it. Maybe I'll do it, maybe I won't. Maybe I'll call Johnny, my realtor, maybe I won't. I don't know. And then all of a sudden someday that letter comes in the mail and they go, "Oh, I've been thinking about doing this. Maybe I should call them and just see like what they can offer." And that's how it works. So in order for you to be able to get that call, you need to be in front of them enough. What does enough mean? To me, enough means every other month. So we mail people on an every other month cadence because, in my opinion, people tend to not make housing decisions in a quicker fashion than that. Typically, from the time that somebody gets the idea in their head, like maybe I'll sell, till when they actually do sell, is usually like months. It could be 6 months, it could be a year. It's usually months. So I know that if I'm in front of them every couple of months, it's likely that at some point when they are ready to do something, that I'll be there, ready for them to take that call. Now, does it mean that if you only send a letter once a quarter that you can't get results? No. Does it mean that if you send a letter once a month that it's bad? No. But I'm talking about what's kind of the ideal cadence to be able to get the people who you want to give you an opportunity to sell their house, to buy their house. How frequent? I would go once every couple months. The only way I would go more than once every couple months is if you say, I want this specific property. I need this property, either because of development purposes or it's like a personal thing or whatever. If you want a specific house, I'd probably go every month. And that's a very aggressive cadence, but if you want to make sure there's no chance that somebody doesn't know that you want to buy their house, once a month will kind of get it done. The other thing that's important with any marketing, but I want to say it with mailers, is you need to track the results from your mailers. How do you track it? Well, you get a specific phone number for your mailers. You definitely want a phone number like a Google Voice or a hosted number or a call rail number, or man, they have a million different type of forwarding numbers nowadays. Get a forwarding number that forwards to your cell phone so you can track how many calls come from your mailers, because you want to make sure that you're getting return on your spend, right? Because the worst thing in the world, it's like you have no idea where a lead came from. So you're not sure if mailing's working. Should I cut it? Should I keep doing it? Is it like the best thing in the world, or is it failing me? You need to have a tracking number. So I'm going to pause for just 1 second. I've covered a lot so far. Does anybody have any questions right now about anything that I've just covered? I've got more, but I want to make sure. If this is making sense, can you just type in "makes sense" into the chat box? I'm not frozen. I'm just waiting. All right, makes sense. Somebody said, "How would you adapt strategy if you could not buy a list to mail?" Well, I'm not sure I understand the question. Is the question that you can't afford to mail, or you can't afford to buy a list? Because the list is going to be the least expensive part of the mailing. The mailing might cost you like $18,000 to get a deal, but the list might cost you a few $100. So my question would be, can you not afford to buy the list or the mailers, or what? Somebody asked, you need a separate number for each mailing, or maybe same number but different extension. So great question. I've got an opinion on this, but this is going to be controversial because different people are going to say different things. When I first started mailing, I had a different number for each letter, and I kind of went crazy with it. And then over the course of time, I kind of realized that it didn't really matter what mailer. I don't believe it matters. In my opinion, the mailers all fit together. So, like, I've been mailing some homeowners for 15 years. Okay. Now, let's say let's say that they call me on letter number 50, and I look and I go, "Whoa, I just got a call off a mailer number 50. This mailer works. Like 49 sucked, 48 sucked, 20 sucked, but 50, this is the one." I don't think that that's true, because they probably got the other 49, and the other 49 probably were part of them calling me. But it didn't show up because they called me on mailer 50. Mailing is a long-term commitment type thing. So your 20th letter could have gotten the call, but it could have been because of the 14th letter or the other 19 letters that you got. So I would only use one number personally. And people geek out on that stuff. I try to keep stuff simple. And I'm a CPA by trade. I'm pretty nerdy, but I try not to get too over analytical on things that I don't think matter. And I think that that's something that falls into that category of it doesn't matter enough to like go crazy about it. Somebody said no list providers in Canada. Ah, man, I don't even know how to answer that because I know there's got to be some solution. But yeah, somebody told me there was an issue with Facebook in Canada too. some privacy laws. Darn. Yeah, I can't help you. I just don't know the answer. I wish I did. Somebody said they're in an urban area. The advice they got was to mail in a certain neighborhood over and over. What's your view on high income neighborhoods? Okay, so two-part question there. Um, so mailing a certain area over and over again. Yeah, if it's an area you like, yes, but you do not want to blanket mail places because what if you're mailing so I interpret what you just said is should I pick a neighborhood and mail every house in the neighborhood? And the answer is no. What if they don't have equity? So you're mailing somebody that just moved into the house a year ago that doesn't have any equity can never sell to you? That doesn't make any sense at all to me. Now, if you're saying, should I pick an area, then put my filters on, make sure they have equity, make sure they've lived in the house long enough, make sure it's the type of house I like, make sure the house, you know, was built before 1970 and mail that area with those houses, yes. Um, Somebody said, what's your view on high income neighborhoods? So this is a demographic question. Demographics play a very important role in this business. Very, very, very. When I explain to a lot of agents how we get off market deals, agents that have never done it before, a lot of them will say back to me, well, that's just dumb. Like somebody could just list their house and get top dollar. And that is a very um, think only of the way I think mentality. And that's not how marketing works. It's not how marketing works at all. It's not how life works. Um, you guys can see, right? Like I'm dressed pretty casual. I'm a casual guy. Grew up in the city. I'm not very fancy. Sometimes people tell me I should dress fancier. I should, probably spend more money on my clothes. But it's not me, and I'm not going to do it. I have the money. I could do it, but I'm not going to do it. It's not something I view as something I want to do. So, but there are people who spend thousands of dollars on one outfit and they look really, really good, like way better than me. And I might think in my head, if I look at it from the same perspective, I might look at that and be like, whoa, that's crazy. Like, why would anybody ever spend $1,000 on one outfit? That's just a waste of money. But then the person who spends $1,000 on one outfit, they look at me and they go, Tom, you're a successful guy that gives off the impression that you're just like you rolled out of bed. And they're probably right. I say this because the person that sells me these hoodies and these hats and these, agent investor t-shirts, right? Fine stuff, but it's not expensive clothing. Um, both companies make a lot of money. There's demographics that fit both types of things. So the question, originally was, you know, like, what's my view on high income neighborhoods? And certain demographics don't sell discounted. So if you're a high income person and you value money, money is the most important thing to you, or it's up there for the most important things to you. You're not of the mindset of somebody that's going to sell at a discount because you value money too much. Just like somebody who wears $1,000 outfit, they value how they look, right? That is the wrong person. The person that sells to an investor, it's not that they don't care about money. It's just that they value the ease of a sale more than the money, right? They may say something like, "I know I can get more money for this house, but money's not my most important thing right now. Like I'm getting older. I just want to downsize. I want a simple thing. I don't want people in my house. I don't want to get my house ready for sale. I don't want the uncertainty of having buyers back out. I don't want the uncertainty of, the mortgage rates have just gone crazy. Like, I just get me a guarantee. Yeah, it's a little bit below fair market value, but like I'm good. Just make sure it's a guarantee. So when you get into a demographic situation like a higher income neighborhood, you start to get more of the mindset of like, get every last dollar. Money's important. Money's, I don't want to say the most important thing, but money is important enough to not give up equity. So if you're talking about like marketing to higher income neighborhoods, your success rate is going to go a lot more down and vice versa. And that's just how this particular type of marketing works. All right, so continuing on, expected results. If you're gonna mail, in my opinion, you have to have a year-long plan. You got to say, hey, I'm gonna spend 4, 5, 6, 7 grand a month for a year, and I'm putting that money aside right now. If I'm gonna spend 7 grand a month, I'm gonna put $84,000 into a bank account right now that I'm not gonna touch, and I'm gonna spend it, even if it goes to zero. And is there a risk there that you could go to zero? Yes, there is. And this is the part about mailing that becomes a negative. I love mailing. I think it's a great method. It's always worked for me. I advocate it. I've trained many people on how to do it. Is it a guarantee? No. Nope. If you're not willing to take that risk, should you do it? No. You should do the free methods. Today's not about free methods, but there are free methods out there. But you have to make a decision. Like, do you want to market for free or do you want to do paid marketing? There are no guarantees attached to paid marketing. I had somebody, I was on a call the other day, inner circle candidate, and they literally said to me, they're like, well, like all you marketers, you want to just take the money and not put any guarantees to them. I said, first of all, I'm not taking your money. I'm not a mail company. I have nothing to do with that. Second of all, like there are no guarantees to anything in life, let alone marketing. But I do know over a large number, the results become more consistent. And that's why, like, if you spend $1,000 a month, I'd say don't do it. Because even though you should get a deal every 15 to 18 months if you spend 1,000 a month, the results are going to be too inconsistent that you're going to end up quitting. So is mailing right for you? Well, I think it goes without saying that I've said numerous times that you've got to have the marketing budget in order to mail. You have to. You have to understand the results that you could get. You have to be willing to be disciplined. You have to be willing to put the money aside. You need to get educated. David Choi, I just had an hour meeting about now how I'm about to shut down my campaign. I used Investor Machine for 7 months, 10K a month, no deals. Any advice? Um, well, that definitely becomes a bigger conversation. I would want to know out of the seven, so you spent, and this is great. I'm glad that you shared that, David, because I don't want to. I don't want to sit here and say that mailing is definitely going to work for everybody. I really don't. Um, and I think that what David just kind of mentioned is almost like if you flip a coin 10 times, you could land on tails like 7 times in a row and never think heads is going to pop up. And I don't want to knock because you spent 70K. That's a lot of damn money. Um, and that's a pretty good sample size. That's a pretty good sample size. So I would question some other things about what you did, but I would also say to it that some of this stuff does come down to luck of the draw. So David, I would want to know who you mailed. I want to know the filters that you put on. I would want to know how often you mailed them. I would want to know how many calls you got. I would want to know how many appointments you got. And if I knew all those stats, I could then determine whether or not the mailing is the issue. So let me just say this, you spent 70K on mailing. Did you get 70 appointments? Because that would be my expectation. Because we don't know based on what you just told me. You spent 70K, you got no deals. Was it a sales problem? Was it an operations problem? Or was it a mailing problem? Or was it just flat out you had the worst luck in the world? So I need to know those stats. Um, and I love to know those stats. And I know I'm familiar with Investor Machine. Um, I understand how they run their lists. I don't run mine exactly the same, but I'd be curious on some of those questions. But thank you for chiming in and really kind of bringing to the forefront that none of this stuff is a guarantee. Um, David, how many calls and how many in-person appointments? Yeah, I want to know. I want to know how many calls you got from those mailers and how many in-person appointments you got. Because if you got 70 in-person appointments, then I would say it's a sales problem. If you got like 5 in-person appointments, then I would want to know like how many leads came in. Maybe it's an ISA problem. If you got not enough leads, then I would say, okay, who are you mailing and what could the problems be with the list that you're using? But, David kind of brings up a good segue for me, which is like before you spend money on marketing, I would love to be a part of that conversation for the people that are in the inner circle, especially if you're in the inner circle. Please, for the love of God, do not spend money on marketing without consulting me. I I cannot promise you that I know everything, but I can promise you that if you bring me any sort of plan, whether it's a marketing plan, any plan related to investing, I can look at it and I can make some improvements. But with that segue, for those of you who want to be on a small group call with a few of us to talk through more your individual situations on Zoom, please go to www.agentinvestorinnercircle.com. And again, please don't book anything until Wednesday, the 19th, because I won't be able to do it. Anything Wednesday the 19th or after, I'd be excited to get people in a smaller group setting. And then we'll talk a little bit about the inner circle. All right. So, any other questions that you guys have about mailing? I will sit here for a couple more minutes just to make sure I answer every question that's coming in. I'm going to check a couple of the chat feeds to make sure that I didn't miss anything. Does anybody else have anything? I'm just checking to make sure I answered all the questions. And I guess my last call to action for the day is, guys, if you aren't registered for the Agent Investor 2-day, November 3rd, November 4th event, please do so today. www.agentinvestorevent.com. It's free. It's going to be really good. I promise you guys that you're going to get value out of it. Yeah, there's no other comments. All right. Oh, there is. David, what kind of list do you mail to? All right, David. So what I do, I'll give you guys some more information on what I do. First thing is, I buy properties in New England. I buy properties in Mass, New Hampshire, Mass, New Hampshire, Maine, Connecticut, Rhode Island, Vermont, small part Albany County in New York, and Duval County, which is Jacksonville in Florida. In every one of those areas, there are areas that I talked about earlier that have more financial distress. So somebody said something like earlier today about like, do you target high income areas? No, I absolutely run as fast as I can from those people because those people are people that don't want to sell to me. Um, I'm looking for my I'm looking for the cities, and there are cities in Boston that I've done deals over and over again. It's literally the 80-20 rule. Like I've marketed to every city in Massachusetts, but where do we do our deals? 20% of the cities give us 80% of the results. And those are the areas that have financial distress. If you are a real estate agent in your market, you know the areas I'm talking about. They're not like secrets. They are the areas they they have financial distress and they also trade a lot and they trade typically they sell really well. They're very sellable areas. They're just areas where there's more financial distress. So number one, I focus on those areas. Um, then I always do high equity. I eliminate, I say, okay, 50% or more LTV. That gets rid of like 70% of all the records. Then I say, I don't want properties that were built after 1970. Again, that gets rid of a lot of other records. Then I say, I want homes where somebody's lived in them for at least 5 years. Again, that gets rid of more. Then I say, I want square footage between, I like 700 square feet to 2,800 square feet. I kind of like, I want to call that starter homes, although like the 2000 plus is getting a little bit out of that. I do not want the big monster homes at all for multiple reasons. So that gives me my list. That's my list. And if I start in a town like I live in Melrose, if I start in Melrose with 10,000 records, I get down to like 2,000 records. Those 2,000 records, I hit them every other month forever. The only way they get off my list is if they call me and they scream at me, which they do. If you mail people, you're going to get yelled at for whatever reason. I don't know why. Um, but yeah, if somebody wants to get off our list, we take them off. Or if somebody sells their house, we take them off. But yeah, other than that, we just keep hitting them. Somebody said probate and pre foreclosure. So you have to understand this. Pre foreclosure, that means that somebody's behind on their payment. Does that mean that they have equity? Remember, one of my most important filter is that somebody has equity. So if they are behind on their mortgage, by default, do they have enough equity? The answer is we don't know. They may have enough equity, they may not. Same thing with probate. Um, Probate is great. You know, they've got a very clear, motivating reason why they probably are going to sell their house. But again, do they have equity? Is it in the right area? So I take a different approach. I look so to be clear, I have a big marketing budget. But this is what I do. Okay? So I'm talking me, not necessarily you. Which is again, guys, why like I really implore everybody to get into the inner circle. Like you should be in the inner circle if you're not. The reason you should be in the inner circle is because I can tell you what I do. Does that make sense for you? I don't know. We have to talk. We have to figure out whether it does. But let's just take the town I live in, the Melrose town. And again, I say we have 10,000 records. I put filter after filter after filter. I get down to 2,000 records. If somebody gets behind on their mortgage, I'm still going to be mailing them. In fact, I've probably mailed them before anybody has mailed them. So I don't wait for it to get to a specific list, right? Like if somebody's behind on their mortgage or maybe about to get behind on their mortgage, they've already gotten letters from me for 10 years. If somebody, I mean, everybody's about to die, right? Like we're all X amount of years away from dying, but some of us are a little bit closer. They've been getting my letters for years after years after years. So I don't use those specific lists because then I would say, give me a pre-foreclosure list. Okay, I got it. Is it in the town I want? Maybe not. Does it have equity? Maybe not. You know, so I take the opposite approach where I make my database. I don't buy lists like that. But again, could it make sense for you for some reason? It definitely probably could. Like if you're trying to go after short sales, you should definitely be doing pre-foreclosure lists. But that's again stuff that we can talk about on that inner circle call, www.agentinvestorinnercircle.com. All right, so I don't see anything else coming in. Again, I truly, truly apologize for not having the typical energy that I do. I am definitely not feeling good. But I love this stuff, and I don't take days off when I'm feeling bad. I just I come to work and I apologize and say, hey, I'm not going to be a 10 out of 10 today. I'm going to be like an 8 out of 10 today. So I appreciate you guys logging in. And what one last thing though, do me a favor, type into the chat box. I've still got a good audience right now. What do you guys want next week's live stream to be about? Please put a topic. If you're still on the live stream, be selfish and put a topic into the chat box now, because I always struggle with this. I always struggle with what we should be talking about, and sometimes I almost feel like I'm forced to kind of select, but I don't want myself to force a select. I want to be able to give you guys the sessions that you guys want. So please do me a favor. This is the one last, pleading I'll do with everybody on the call. Type into the chat box right now with just, if you're going to pick a topic selfishly, forget about everybody else here. What would you want next week to be about? Somebody said digital marketing, SEO. What else do we got? Come on, guys, help me out here. I know most of you guys are still active. I don't see really almost anybody dropping off, which I appreciate. Other lead gen strategies, Facebook ads, a lot of lead gen stuff. Anything besides lead, I love lead gen. Low cost marketing, yeah, we could do that for a while. Text marketing. All right, keep them coming. I know if we can get a few more people, I would appreciate it. Financial freedom blueprint in order. Ordered steroid. All right, we can put the blueprint on steroids. We don't get tested. Agent investors, we don't have to test for performance enhancing drugs. So at least for the time being, we can put on some PEDs scripts to speak with motivated sellers, how to handle initial call from your marketing. Okay, that's a good one. Main question to ask homeowner over the phone. Yeah, we get it. Like, would anybody else be interested in like the script talking piece of it? Because we have a few script things that came in to talk to sellers. I'm kind of liking the idea of that. Can I get some feedback on whether or not that would be something that you guys would find valuable? Because that's something I haven't covered at all. And it definitely matters because, like something that David had put earlier in here, he spent a bunch of money on mailing and didn't get a deal. And that's the first thing I think of in my mind is like, well, yeah. And this is what makes it tough. It's not necessarily always about spending the money, but then you've got to have the right conversations with the sellers. All right, cool. I think I might go down that direction because I got a bunch of yeses. So maybe next week, let me just think about like how to structure that. But maybe next week we'll do something um, about specifically the scripts on talking to sellers because it is different than going in on a listing appointment. It's much different. You can't take the same approach. Um, let's do that. And again, I appreciate you guys bearing with me today. And if we come up with anything else, if you guys have any other ideas related to scripting, I'd love to hear them. And I'll put a post actually after I get off right now in the group, just asking like what type of scripting you guys would want help with. So, all right, I will see everybody next Tuesday, and hopefully you guys have signed up for that smaller group session on the inner circle. All right, I'll talk to you later.